Ladies and gentlemen, good day and welcome to the Adani Power Limited Q1 FY27 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities Limited. Thank you, and over to you, sir.
Thank you, Rio. Good afternoon. On behalf of ICICI Securities, I would like to welcome you all to the Q1 FY27 earnings call of Adani Power Limited. Today, we have with us from the management, Mr. S.B. Khalia, CEO, Mr. Dilip Jha, CFO, and Mr. Nishit Dave, Head Investor Relations. We'll start with a brief opening remarks, which will be followed by Q&A. Thank you, and over to you, sir.
Good afternoon, friends. I want to extend a warm welcome to everyone who has joined us today for our first quarter 26-27 earnings call. I appreciate you taking time out of your busy schedule to connect with us. Before we begin, I encourage you to download and review our quarterly results and analyst presentation, which are available on the stock exchanges and our website. With me on the call today are our CFO, Mr. Dilip Jha, and our Investor Relations Head, Mr. Nishit Dave. As we begin this new financial year, one thing is increasingly clear: in times of geopolitical uncertainty and extreme weather events, a nation needs abundant, reliable, and domestically available energy. As India's economy continues to advance, the importance of reliable baseload power to the country's growth story has become even more evident. During the quarter, India experienced a hotter than usual summer with sustained heat waves across most regions. Due to these high temperatures, peak demand shot up to a record high of around 271 gigawatt in May 26. While overall energy consumption rose by 8.4% on year-on-year to 485 billion units for Q1 2027. This has also put to rest concerns over any demand slowdown that has arisen in the previous year. Thermal power was once again the mainstay for fulfilling the nation's electricity needs during this period of surging demand. I am immensely proud to say that Adani Power stepped up to this challenge. We achieved our highest ever quarterly power generation of 31 billion units and dispatched 28.8 billion units, a growth of 17%, which was a result of improved PLF as well as greater operating capacity. We have once again demonstrated the strength of our efficient, cost-effective portfolio and operational excellence by reliably supplying power when the country needed it the most. Financially, we have started the year on a strong note, posting our highest ever quarterly performance. Total continuing revenue for the first quarter of 27 is 17,936 crore, which is a growth of 27% over the corresponding quarter of 26. Continuing EBITDA without prior period items for the quarter is 6,983 crore, which is 22% higher year-on-year. The company has reported 47% higher profit after tax on year-on-year at 4,867 crores for Q1 27, reflecting our operational profitability and excellent management of the capital structure. Beyond our financial and operational milestones, this quarter has been defining for our strategic growth. We are consolidating firmly on the path to expand our portfolio to 45 gigawatts. A major highlight of the recently concluded quarter was the successful acquisition of the stake of Jayaprakash Associates in various power assets under the corporate insolvency resolution process. This strategic move adds the 180 megawatt Churk power plant to our portfolio, alongside a 24% stake in Jayaprakash Power Ventures and an 11.49% stake in Prayagraj Power Generation Company. These acquisitions further expand our reach and operational footprint. Additionally, we secured our revenue visibility further by signing a 25-year power supply agreement with the Maharashtra Discom for supply of 1,600 megawatt of power on a long-term basis from a 2 by 800 megawatt ultra supercritical thermal power plant. We have announced the receipt of letter of award for this PPA earlier in March 26. Our capacity expansion program is programming at an excellent pace. We are on track to commission the 1,320 megawatt Korba Phase 2 project this year, while the 1,600 megawatt Mahan Phase 2 project is scheduled for commercial operation in Q1 of next year. Furthermore, execution is advancing rapidly at Raipur Phase 2 and Raigad Phase 2, which have achieved over 62% and 54% progress respectively, and we have commenced execution for our 1,600 megawatt Mirzapur Greenfield project in Uttar Pradesh. As you would be aware, we have ordered the entire 24 gigawatt of BTG supply in advance and secured the land required for the expansion program. We have tied up 56% of upcoming capacity already under long-term PPAs, and we are confident of tying up the balance capacity soon through ongoing and upcoming bids. Further, I am thrilled to say the Adani Power has been ranked as India's most valued energy brand by Brand Finance, with a brand value of $1.8 billion and a AAA rating. This is a testament to the trust our stakeholders place in us. Looking beyond the horizon, we are entering new and exciting territories. As we expand our thermal base, we are also diversifying into international hydropower projects and preparing ourselves for new opportunity in the nuclear power field. We are strongly committed to helping India meet its long-term development goals with the supply of reliable and competitive electricity, and I look forward to interacting with you as we progress on this path. Thank you. I would now like to hand over the call to our CFO, Dilip, to elaborate further on the Q1 results. Thank you, and over to you, Dilip.
Thank you, sir. And good afternoon, everyone. I will take you through the financial and operating performance for Q1, FY27, and then share a brief update on our balance sheet and liquidity. So let me start with our operational backdrop. As Kalia sir mentioned, Q1 27 was characterized by exceptional demand driven by persistent heat waves. Consequently, power uptake under PPAs improved significantly, while merchant prices also strengthened materially. In this environment, APL achieved a phenomenal operating performance. Our consolidated plant load factor jumped significantly to 78% in Q1 FY27 compared to 67% in the corresponding quarter last year. Our consolidated power sales volume were higher by nearly 17%, reaching 29 billion units against 25 billion units in Q1 last year. This strong volume growth was supported by higher operating capacity, robust power demand, and PPA tie-ups for our previously open capacities at Butibori and Tuticorin power plants. Specifically, power sales under PPAs grew by 30% to 25 billion units. Merchant volumes were 4 billion in Q1 as compared to 6 billion in the last quarter last year, same quarter last year. Due to this, our tying up capacity in PPAs increasingly, and incrementally during this period. Coming to revenues, I am very pleased to say that Adani Power has posted its strongest quarter yet in terms of continuing revenue and continuing EBITDA. Strong generation volumes combined with improved realizations translated into our strongest performance yet. Continuing revenue from operation for Q1 27 increased by a robust 28% to rupees 17,550 crore. Total continuing revenue, which includes other income, stood at rupees 17,936 crore, reflecting a 27% growth year-on-year. Our total reported revenue, including one-time period price paid item, reached to rupees 19,332 crore, as nearly 33% increase from Q1 last year. Our tariff realization under PPA improved by 8% to rupees 5.93 per unit, and merchant and short-term realization improved by 13% to rupees 7.04 per unit. Directly benefiting from the strong demand environment, our PPA realization includes the fixed capacity charges of PPA that we have signed recently for previously open capacity, that is in Vidarbha and Tuticorin. During the quarter, we have reported a one-time net recognition of prior period revenues of rupees 1,386 crore, primarily due to the revision in historic energy charges under certain PPAs. Moving to profitability, during Q1 27, we have showcased core profitability strength despite an increase in fuel cost. Fuel cost for the quarter was higher up by 30% at rupees 9,513 crore, which is driven by larger dispatch volume and higher imported coal indices. With these, our continuing EBITDA grew by 22% to rupees 6,983 crore. Reported EBITDA surged by 36% to rupees 8,369 crore. This improvement was primarily driven by higher volume and an improved PPA contribution. At the bottom line, profit before tax on a continuing basis registered a strong 29% increase to rupees 4,914 crore. Reported profit before tax jumped to nearly 50% to rupees 6,300 crore. Ultimately, our profit after tax for Q1 FY26 rose by a stellar 47% year-on-year to rupees 4,867 crore, up from 3,305 crore in Q1 26. Let me now touch upon the balance sheet and our financial discipline. Despite our growing capacity, recent acquisitions, and an ongoing capital expenditure program, we have maintained very tight control on our finance costs. We continue to follow a conservative capital management policy. Our strong liquidity and healthy profitability have helped us keep our leverage in check. As of June 30, 2026, our total outstanding stood at 58,381 crore, and our net debt stood at 47,643 crore. Our rapid capacity expansion is largely supported by predominantly self-finance capital expenditure strategy, strong project execution track record, and in-house management capabilities. Together, these factors give us structural cost advantages and ensure that we deliver our capacity addition in a timely and cost-effectively manner. Now, to summarize, we delivered our highest ever operating and financial performance on continuing basis this quarter. Capacity utilization remained exceptional with PLF of nearly 78%. We are expanding both organically and through strategic acquisitions. Our balance sheet remains robust and supportive of our 45 gigawatt vision. Thank you for your time and your continued confidence in Adani Power. We will now be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Abhinav Nalavade from ICICI Securities. Please go ahead. Mr. Abhinav, you may go ahead with the question.
Hello. Yeah. Hi. Thanks for the opportunity. My first question is whether the JP, the Jaiprakash, will it be consolidated, and do you have some expansion plans at Nigri and Bina? Also, what will you do with the 11% shareholding at the Prayagraj?
Are you asking related to consolidation in the accounts, or you are asking related to the expansion?
With regards to accounting. Yeah, accounting.
Yes. So thank you, Abhinav. Let me, brief you. For JPBL, in JPBL, we have, also taken 24% stake, and there we have very good assets over there. For accounting purpose, we are considering, the respective percentage. So this is an associate for Adani Power. So the percentage of profit in JPBL, we are consolidating to that extent in APL profitability.
So P&L and balance sheet is not getting consolidated. It is only the share of profit is getting consolidated. So the other issue regards to the opportunity of expansion at Bina and Nigri, there is a good opportunity because at both locations a lot of land is available. So fortunately going forward we will have this as a land bank available where whether we want to go for expansion of thermal or whether we want to go for nuclear, because in case of Bina, we are also exploring the possibility whether we can develop there the nuclear, whether the site is conducive from the point of view of various requirements of nuclear. So we have not yet planned anything, but these are the two sites where a good land bank is available, and going forward, these sites will be obviously available for any growth opportunity. Thank you.
Okay. So second question is on the nuclear. You mentioned for the first time that you'll be targeting capacity of about 10 gigawatts by 2035. Just wanted some granular details on it in terms of is there any technology tie-up, whether the domestic technology available with NPCL will be used or will it be sourced, will it be imported? So secondly, on the fuel sourcing as well as when can we see some tangible traction in terms of, the first nuclear power plant? Is it contingent on the final guidelines from the government? You can give some details, that would be helpful.
So you have said rightly that it will be dependent on the government guidelines, and government has yet not come out with the rules under the Act. So unless we get the clarity on that aspect, it would be difficult to decide on these things. Nevertheless, we are evaluating both domestic and the outside technologies, and it will all depend on what would be the cost effective in terms of per megawatt cost. Because end of the day, electricity has to be viable for the Indian consumers, and the type of rates which are affordable to DISCOMs, the project cost has to be in that, let us say, range. So we will take all these calls related to technology, whether it will be domestic, whether it would be foreign technology. So all these things can be finalized only when the rules are in place. So at present we are waiting for the rules to come. As soon as that happens, we can move fast. We are keeping our sites ready from the point of view of their suitability, and various studies are being carried out. So that is the status today.
So my final question is on the receivables from the Bangladesh PPA. What will be the number and the corresponding number a year ago?
Yeah, for this quarter ended, the receivables are, so really in line with as we are also getting payment on regular basis. Last month also we received, so near about $100 million. So on an average monthly basis, we are getting $100 million payment, and specifically for June, quarter, our receivable is near about $400 million, and we are expecting that every month on an average we will, get from BPDP, so we are about $100 million. It will be continued, and it will be slightly higher than our monthly billing. So we are expecting that the receivable, so the liquidity and realization will also increase over the period of time.
What was the last time?
Understood. Got it, sir. Thank you. Thank you very much.
And also, there is significant, if you will compare on quarter-to-quarter basis. So in first quarter, last financial year, the receivable was, all-time high. And as you know, that in June, so in June, July last year, we had received a significant amount one time. That had helped, us a lot, so in reducing this receivable of Bangladesh. So the receivables are, have significantly reduced on quarter-to-quarter basis, and we are getting on an average $100 million monthly basis.
Thank you, sir. Thank you. Thank you very much.
Thank you. The next question is from Apurva Bahadur from IIFL Capital. Please go ahead.
Hi, sir. Congrats on strong results, and thank you for taking the question. I see in your presentation you have highlighted an incremental capacity plan of another 3 gigawatts. Can you throw some light on this, sir? Where will it be used? Any plans to use it on a captive basis for the group companies, or do we expect more PPAs? And how about the equipment ordering for this?
3 gigawatt can be construed from, let us say, 2 angles. One is we have already got the 24% stake in the Jayaprakash Associates. So that itself is 2,240 megawatt. So going forward, if let us say we can get more stake in that, then this itself can be considered as, let us say, part of this another 3 gigawatt. Moreover, lot of opportunities are arising because this summer has given a clear indication to the policy makers that a lot of thermal power projects are required, base load is required, and obviously the nuclear will take some time. Even if we get the rules in your future, any nuclear power project is going to take from the stage of planning to, let us say, commissioning 7-8 years. So during this period, the thermal would be the only source which will provide the base load power. So obviously, a lot of states are contemplating to come out with the bids. If you will see the resource adequacy study of various states, every state is having huge deficit and requirement for the next 4, 5 years, 6 years. So we expect that many more bids will come from the DISCOMs, and therefore we have thought of that probably will need to add few more capacity, because the present 24 gigawatt capacity which we have planned, that capacity is now tagged to the specific locations also. So if any state will come with a bid which will, let us say, is made specific to that state location, in that case we have to obviously tie up the new capacity. So keeping that in mind, this additional 3 megawatt is considered and planned. Thank you.
Okay. That's helpful. So also on your nuclear plan, I believe the target has been increased from 5 to 10 gigawatts, and the deadline or the target timeline is around 2035. By when do you expect to actually order these plants so that they commission by 2035?
As I said earlier, that only when we get the rules under the Act from the Government of India. So we are keeping us ready, but ordering can happen only when there is a clarity about the rules of the game.
No, fair point. I just want to understand, sir, what's your take on what would be a typical execution timeline for a nuclear power plant?
As per our standard of execution, it should take around, let us say, maybe that is not yet, we have not experienced this, but it should take at least 5 years.
5 years, that's quite a short timeline. I mean, against what we are typically conditioned to see anyways. Sir, I think you gave some details on Godda. Would be very helpful if you can provide probably the generation number and also what's the realized tariff for this quarter.
Just a moment, please.
Sure, sir. In the meantime, if I may ask one more question on... Oh, please go ahead.
So generation in terms of unit, this quarter in Godda, so the unit we sold 2.519 billion units as compared to last year same quarter 2.362 billion. So there is an increase in terms of unit we sold to the PPDP during the quarter.
Realize.
And in terms of realization, our total revenue for this quarter is 2,473 crore, as against the same quarter last year it was 2,135 crore.
Very helpful, sir. That's
Thank you.
great. Sir, also, if I may just squeeze in one more question, and this is on the agreement which we have with Adani Energy, right? So another sister company of yours, Adani Green, has an agreement of sharing some capacity locked-in returns with Adani Energy. Do we have any similar plans, and how much of that capacity would be earmarked, and what tariff?
You are talking about this 2500 megawatt PPA?
I'm talking about this the energy management solution business which Adani Energy has incubated. And I think for supply over there, they are tying up with group companies for capacity.
So, I would not appreciate their question. Are you asking any question related to Adani Power? Because neither the green is with Adani Power nor the PTSL is with Adani Power.
Right. So we don't have any PPAs with them, with Adani Energy?
No, we don't have.
Okay. And sir, lastly, I think I also see that you have taken an approval for an equity raise. The balance sheet is very robust for us. So is there any specific use case you want to deploy this capital for?
Yeah, the board has approved, this QIP, and we have requested to our shareholder through EGM, and this will be an enabling provision, to be ready, so for this QIP. As of now, so these are the enabling provisions, so we have requested to our shareholder. And the capacity expansion, the massive, we have already taken so the capex program of more than 2 lakh crore over the period of next few years. At the same time, we are generating heavily, internal accruals from our operating assets. So the interim gap we are meeting through, so the short-term, the requirement that we are taking from the market. So this QIP is, the enabling provision we have requested to our shareholder through EGM.
Thank you. Before we take the next question, a request to participants to please limit your questions to 2 per participant so that the management is able to address questions from all participants in the conference. We move to the next question. The next question is from Dhruv Muchal from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you. So first question is, in the prior year first quarter and current quarter, can you help us? What was your merchant capacity? When I say merchant, it is nothing beyond, say, 1 year PPA. Because what I see is your merchant volumes on an absolute basis have come off, so 4.3 billion versus 5.6 billion units last year quarter. But I believe your merchant capacity has also come off, right? Is that the right understanding?
Yeah.
A lot of your merchant capacity is converted to PPAs, if I'm not wrong, in this quarter. So if you can help us with the quantum.
Yeah, your understanding is correct. The merchant capacity has, reduced. Specifically, during my speech, I said that for our Butibori plant as well as, our Tuticorin plant. Earlier, these plants were on merchant basis. Now these are under PPA. Specific to the volume, this quarter, the volume is almost, the 4 billion unit. And the same period last year, it was 6 billion unit. There is, so 1/3 reduction in terms of the merchant unit.
Mm-hmm.
And there is capacity reduction, in open capacity. So.
Got it. So Butibori is 600 megawatt, right? And your Tuticorin project is also 600 megawatt, effectively, which was open. So 1200 megawatt effectively got converted from, which was last year same period merchant, which is now under PPA.
Correct.
Got it.
So as well as Butibori is also 600 and it is fully tied up now under the PPA. Some capacity of even Raipur is tied up under the PPA with the Karnataka. So a lot of reduction has happened, and as we said that going forward we would like to tie up almost everything through the medium term or the long term PPAs to reduce the volatility in the market prices. Thank you.
Sure. And sir, second question is, we see Maharashtra has approved a PPA, which is to be sold to Adani Energy Bombay, but it seems you also have a role there. You will be supplying 540 megawatt thermal. So it's, it's partly related to the earlier question. So probably Adani Energy is the intermediary, but you become the supplier of thermal power there. But sir, just wanted to understand how does this work for you? Because it's an RE-RTC contract, and you have a thermal plant. Now it's probably 540 megawatt. You will probably have to ramp it down, ramp it up. But does the cost of that not borne by you and it is borne by the intermediary? I'm just trying to understand, because we don't see that kind of ramp up, ramp down in a thermal plant. Or you get your assured power, you get your assured, fixed charge by running the plant at the minimum technical load or higher than the technical load, and you're not impacted by this arrangement.
So, presently, as we said that it is already tied up under a medium-term PPA with the Maharashtra, MSDCL. So, once we will sign, because this has to be signed between us and the intermediary. So, once we will sign the PPA, it would be a PPA based on the capacity charges. So it will not be a power supply in terms of unit only. It would be a capacity tied up. So it would be a PPA like any other PPA of thermal power project. So making it RTC, it is the let us say exposure taken by the PTSL.
So for you, the contract structure is exactly similar to like a typical PPA.
Correct.
What we are generally used to. And and the ramp up, ramp down, and all those things, you get your technical whatever minimum and all those, and all those volatility gets handled by the other party.
Correct.
Sure, got it. Great, sir. Great. Thank you so much and all the best. Thanks.
Thank you. Next question is from Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Sir, good afternoon. Like you rightly said, you have been maintaining excellent financial discipline. Now, in terms of, you have a large expansion plan. Over the next 2 to 3 years, how do you expect the net debt to EBITDA move, especially because you'll have also one-off acquisitions and so on, because the opportunities are very good. And what can we expect in terms of net debt to EBITDA guidance from the company?
So as I was explaining that We are running a capex program of more than 2 lakhs crore, and on an yearly basis, we are generating an FFO of 20,000 crore. So in the same period, there will be an FFO of, so more than 1.4 lakh crore. So there will be an interim requirement of, so around 60,000 crore that we will take from the market. So far, net debt to EBITDA is concerned, we are maintaining a very robust capital management program, and also we are ensuring, our deployment of single penny in the best possible and effective manner. Net debt to EBITDA as on date, so on June, this is slightly higher than the 2. And what we are expecting that it will not, so it will not cross net debt to EBITDA 3 at any point of time. So this net debt to EBITDA between 2 to 3 will run over the period of time.
So thank you very much. That was my only question, and all the best, sir.
Thank you.
Thank you. The next question is from Girish Achipalya from Morgan Stanley. Please go ahead.
Congrats and thanks for the opportunity. I had a couple of questions on slide 25. We have long-term PPAs that are in the market for 13.2 gigawatt. And on the same slide, we have an untied capacity of 11.1. Our historic strike rate has been about 2/3 on the market in the last 2 years. I wanted to understand, which are the likely states which we would probably see the bidding close in the next, let's say, this fiscal. And will there be more such states come through in the next year? Because if I assume 2/3 get through, you'll still be landing up with, let's say, 4-5 gigawatt of untied capacity right now. And one question as a follow-up on that MSCDCL contract of 2.5 gigawatt, which is RERTC, I'm not sure whether this is captured in the PPA bucket that you have right now, because on the left side where you have the capacity tie-ups, there is 10.2 which is tie-up in progress. So would that PPA be counted here, and what is the quantum of PPA here? If you can just clarify on that.
So the numbers you have already stated as regards to this, the numbers stated on the slide is considered. It is already given which bids are already under progress, which is UP is 4,000, Gujarat is 4,000, Uttarakhand is 1,320, and West Bengal is almost 3,800. So 13,000 megawatt of bids are there, and obviously we would be the, let's say, strongest contender for these bids. Apart from this, if you will see the resource adequacy study of various states, many states are having a deficit. The Bihar is having further deficit. We have heard that recently Andhra Pradesh has also sought the coal linkage for coming out with the bid. So there may be many more states. So we can't say exactly when they will come out with the bids, but obviously the resource adequacy study gives an indication that many of the states are having requirement going forward up to 2032-33. So that gives us a strong signal and confidence that we will get our capacity tied up. As regards to 2,500 megawatt PPA is concerned, as I stated in the last earning call also, that this is a supply contract. It is nothing to do with this long-term sort of a capacity. And that supply contract has the requirement of 51% from the green sources. So therefore, this contract by nature is, let us say, where we can supply some of our small left out capacity of thermal small left out capacity of green, which includes solar, wind, battery, PSP. So this PPA would be obviously run like a trading platform, and we will decide going forward which company will, let us say, actually run this PPA. But this PPA will need multiple sources of supplies from various sources, and it would be pooled at one platform and then will be supplied to the beneficiary. Thank you.
Understood. So my second question is on capacity expansion timeline, and thanks for the disclosure over there, annually putting out what is expected. In the next 2 years, in FY27 and 28, you are expecting 1320 and 1600 megawatt. Just wanted to understand which quarters and which plants are these likely to be? Are we likely to have them back-ended, or it could be evenly split? FY27 this year and FY28.
So Korba this year, we assume that it will come before, let us say, December end. That is the broader expectation. And as regards to next year, Mahan is concerned, we are expecting first unit in first quarter, and obviously then second unit, though it is expected that a unit should have a normally gap of 6 months. So if you go by that standard, then obviously that will come in the third quarter, but we are trying to bring that also in the second quarter.
Thanks, sir. And last question is on capital expenditure. If you can outline for next 2 to 3 years, what will be the annual run rate that you would be incurring?
Yeah, just a moment. Yeah, so this year we are expecting that our capex will be near about 23,000 crore. Next year it will be more than 30,000 crore, and thereafter it will be near about 33 to 35,000 crore.
Thank you, sir.
Thank you. Before we take the next question, a reminder to participants to please limit your questions to 2 per participant. The next question is from Shweta Rakecha from Cantor Fitzgerald. Please go ahead.
Good afternoon, team. Shweta here on the line on behalf of Manish from Cantor. First, congratulations on a great print. I just had a quick question on the funding mix that we spoke about earlier, and this is regarding the QIP. What is the expected execution timeline, and how should we model sort of the resulting per share equity dilution there?
Shweta, we could not hear you clearly. Can you sit a bit closer to the phone or pick up the receiver and speak?
Yeah, sure. Hi, I hope I'm more audible now. I just wanted to ask a question on the funding mix regarding the QIP. What is the expected execution timeline, and how should we model the resulting per share equity dilution? I'm just continuing on the earlier question that were asked here.
Yeah, so Shweta, as of now, so we have requested to our shareholders through EGM as an enabling provision. And the timeline, so we'll communicate as and when it will be finalized.
So, Shweta, to actually explain it a little bit, as and when there is a need for raising funds and the market opportunity also presents itself, we would come out with our plans and announcement at that time. As of now, this is an enabling provision so that we don't have to go for shareholder approval when we need to raise funds. And this is actually a provision that we need to keep on refreshing every year.
Right. Also, apologies if I missed this. regarding the proposed 3 gigawatt additions, and with the potentially 2.4 coming from Jayaprakash, are they currently already under the PPA, or is it open right now, this capacity?
I think I have already explained earlier the same question, that 3 gigawatt, what we have already stated, is a sort of a planning, because a lot of bids are coming from the states. So it's not that we have firmed up the capex, or we have firmed up the ordering, etc. It is a plan envisaged to meet the future bids which are going to come from the states, other than the states where we have already planned our capacity expansion. So this is just a sort of a planning to take care of the forthcoming bids. And as regards to the Jayaprakash Power Ventures is concerned, at present, since we have 24% stake, as and when if we will get any further opportunity of increasing the stake, then we will be in a position to take that call. Thank you.
Right. Just one more follow-up on the nuclear strategy. Do we have a capital allocation plan in place for the next 5 years?
As I explained earlier, that for nuclear, we have only stated our intention. So unless the Government of India notifies the rules, we cannot decide exactly in which year how much we will invest and when we can commission the projects, because we are waiting from last, let us say, 6 months or so for the rules to come. But the rules have yet not come. So as and when the rules will come, then only we will start preparing the exact plans. Thank you.
Thank you. The next question is from Shirom Kapoor from Jefferies. Please go ahead.
Hi, sir. Thanks for the opportunity. Just a quick question on your upcoming plant this year in Korba. The PPA for this plant, we have not signed one yet. So just wondering, by December end this year, are we expected to sign a PPA, and once this is operationalized, will it already be supplying under PPA, or is this expected to be supplying under the merchant market for some time?
Even if we will, let us say, sign PPA during the current year under a long-term any of the bids, even in that case also there would be certainly some period, maybe a year or two, during which we would be supplying power under the merchant from this capacity.
Understood, sir. But just follow up on this, do we have visibility on any PPAs coming up soon? Like when are you expecting to sign a PPA for this plant?
Yeah, recently we have participated in a bid where the results are yet to out, and obviously whatever other bids are there, we will participate there also. So we are certainly hopeful that we should be in a position to tie up in the current year itself. So let us see.
Understood, sir. And just my second question is on your acquisition, the 180 megawatt plant from Jayaprakash. Is that operational? So would that be, would that start contributing to your financials from the second quarter onwards? And is it tied up under any PPA right now?
It is not operational. It's like something like which we acquired the Botibori, so more or less in same condition. So it will take some time, maybe 6 months or so. So we don't foresee much contribution during the current year. So we have to revise this, and we can certainly expect a good contribution from the next year, and it is not tied under any PPA.
Thank you. The next question is from Vishal Periwal from PL Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, just a clarification. So we have reported a continuing EBITDA adjusted for one-off increase is almost like 20-22%. And now, if I look at our capacity increase is hardly 4-5%, and merchant sales, I think probably merchant revenue is largely flattish. Given our PPA tariffs are two-part, what would explain this strong EBITDA increase? Because I think base period last year, again, we could have done good PAF. We could have recovered fixed charges. This quarter, we could have done the same thing. So just for to get a clarification.
Yeah. So to give you, the clarification so the why this quarter performance is, the robust and strongest ever. So, so as you rightly said that our revenue consisting of two parts. So in terms of capacity charges and energy charges. Capacity charges, as we are explaining to you that, so we have converted some of our open capacity into under PPA. Either this is in Tuticorin or, so in Raipur and Vidarbha. There, the capacity charges is, significantly we have, so it's higher. Second, in terms of, the energy charges also, if you see some of our plant where the indices, we are using imported coal, right? So when the imported coal indices will be higher, our contribution will be, the higher. Accordingly, it will be also higher. So the contribution in EBITDA is driven by the volume. There is significant increase in volume. There is increase in capacity charges and also some contribution in energy. So making all together, our EBITDA is, the robust and higher in comparison to the, the same quarter last year.
Sure, sir. I think this explained, and thank you, sir.
Thank you.
Thank you. Next question is from Nikhil Nigania from Bernstein. Please go ahead.
Thank you. I had two questions. One related to the earlier question on the EBITDA bridge, which has been shared in the presentation. So it shows there was a gain of 2,200 crore due to change in fuel cost. So I wanted to clarify, is it the same part you mentioned earlier that due to indexation of variable tariffs in some PPAs that went up rather than the actual fuel cost coming down, why this 2,200 bump up is there? Or is it something else which is a change in fuel cost of 2,200 crore?
Yeah, so as I explained, so you rightly understood. And then adding to that, so the volume has also increased now. And then the indices have imported coal. And the merchant prices and everything has also increased. So making all together, it is contributing.
Makes sense. The second question I had was on the hydro asset that we are building in Bhutan. Possible to share the commercial terms of that PPA of 570 megawatt and future plans?
PPA is yet not finalized. PPA is yet not finalized. So as and when it is finalized, we will certainly say.
Got it. And would it be at least, do we know the regulatory structure? Will it be a sort of a cost plus structure or fixed tariff, or is that also yet to be finalized?
No, that is also to be finalized. So it's open. So whatever will be the best opportunity, we will capture that, whether it would be through a bidding process or whether it would be through a cost plus mechanism.
Got it. Got it. Thank you so much. Those were my questions. Thank you so much.
Thank you. The next question is from Sumit from Subij Enterprise. Please go ahead.
Sir, first of all, very congratulations for stellar numbers. My question is, we have sufficient reserves available. Can we expect some dividend or bonus?
See, what we have explained during the question answer and otherwise also, that we have a huge and large capex program for next 6-7 years. So rather than distributing, we are reinvesting in the capex program. And as you may be aware that our the return on investment or return on the capital is quite good. So we are of the view that we are giving more capital appreciation than the dividend, and therefore we are reinvesting whatever surplus we are generating. Thank you.
Okay. Got it. And sir, in the result, have we considered Bangladesh disputable portion?
No, we are not considering whatever is disputed. We are considering as revenue only which is not disputed.
Okay, fine. That's it from my side. Thank you. Thank you.
Thank you.
Thank you. The next question is from Digant Kumar from SAMIL. Please go ahead. Digant Kumar, you may go ahead with the question.
Oh, thanks for the opportunity, sir. Given the strong given performance and the aggressive expansion plans, what are the major short-term catalysts and risks for the company?
Sorry, can you repeat it again? Your voice is breaking.
So, given the strong given performance, what are the major short-term near risks for the shareholders in the next 3 to 6 months?
Short-term risk.
Is that your question? What is the short-term risk?
Hello, Digant, can you hear us?
I hope you can hear me. Hello.
Yeah, so actually we want you to clarify your question. Are you asking us about short-term risks?
Yeah, the short-term catalysts and the risks for the next company, 6 to 12 months.
Catalyst. Short-term catalyst. Okay, so primarily, see, Digant, actually, we have a largely contracted business. 95% of the capacity is already tied up in power supply contracts with DISCOMs, most of which are long-term in nature. Around 5% is open capacity, where we supply power in the short-term market and on the exchanges. So primarily from that perspective, we have a very high degree of stability when it comes to our EBITDA. Although revenue might fluctuate here and there based on the power offtake by DISCOMs, given the specific demand environment. But as we have an availability-based tariff mechanism, two-part tariff mechanism, we have a good stability of EBITDA on a quarter-on-quarter basis. The first quarter in the financial year tends to be a peak quarter because of the high demand of electricity, because of the high temperatures, the beginning of the sowing season, etc. So because of that, we generally see higher volumes during the first quarter. Then during the monsoon months, actually, typically because of rains, the power drawdown goes down a little bit. So that is the sort of seasonality we generally see in our revenues and to a small extent also in the EBITDA. But now that we largely are supplying power under long-term contracts, we expect to see over the near term and medium term, typically more of stability when it comes to revenues and EBITDA.
Noted. Thank you.
Thank you. A reminder to participants that you may press star and 1 to join the question queue. Anyone who wishes to ask questions may press star and 1. The next question is from Nitin Prajapati from Suyog Management. Please go ahead.
Hello. Hello.
Yeah, Nitin.
In the previous quarter, company guided approximately 25,000 crores in.
Nitin, I'm sorry. Hello, Nitin, I'm sorry. There is background noise from your call. Can you please go to a quieter place and speak without using the speakerphone, please?
Okay. Hello. I'm audible clear?
Yes.
In the previous quarter, company guided for approximately 25,000 crore for capex in financial 27. Okay. And 33,000 crore for financial 28. But in company proposed 50,000 crore equity rise now. Has anything changed in your capex plan for or funding mix? And Should we read this as a preparation for expansion beyond the previously announced 23.7 gigawatt program?
There is no change in CapEx program. We are very firm and confident that our CapEx program of 2 lakh crore we will be able to achieve in the defined timeline. And the CapEx, so we are expecting that, so as I briefed a while ago, that this year we are expecting that it will be, so 23,000 crore and then maybe some plus. Next year it will be, so more than 30,000 crore, and thereafter it will be more than 33,000 crore. So 33 to 35,000 crore. So we are very much firm, very much confident that this CapEx program we will be able to achieve. So far financing is concerned, as so time and again I used to say that our internal accruals is, so significant. So the majority of the, of financing and funding we will be arranging for our internal accruals. Any interim gap, short-term gap, that we will take from the market. We are very much firm, confident that we will be able to achieve our CapEx program.
Okay. 20.7 gigawatt is so easily available as per plan.
Yeah, sorry?
23.7 gigawatt will achieve it easily as per company's plan. Is that right?
Yeah, sir. Yeah. Now our target is 45 gigawatt by the, by the same time. It is now revised from 42 to 45. And we are confident that we will be able to achieve it.
Okay. Timeline for financial year 31 or beyond?
Yeah, same timeline as it was for 42 gigawatt.
Okay. Got it. Thank you very much.
Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you. Thanks a lot for your time and attention to us. And we are very much confident and hopeful that this engagement will be continued and we will have continued support from you all. Thank you. Thanks a lot. Have a great day.
Thank you very much. On behalf of ICICI Securities Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.